2008 happened and we lost 50 to 60% of that cash value. And that's what opened up my eyes. And I saw clients, most of them really got punched in the gut, but very few actually thrived. And that's what opened up my eyes. What are you guys doing different than what everybody else is doing?
This podcast is for informational purposes only and does not constitute financial, legal, or investment advice. Please consult a professional advisor before making decisions based on what you hear on this show.
Welcome back into the Financial Freedom Roundtable. I am Russ Morgan. I'm going to be one of your hosts today. Our topic is my wealth isn't protected like it should be. So if you have some maybe asset protection issues, liquidity issues, or maybe you've been concerned about, how's all my cash going to work out in this economy? Today, we're going to expose different things that we're seeing on a daily basis. I am surrounded by the dream team of financial coaches. First on the list is my partner, Mr. Joey Murray. Good to see you, Stallion.
Always a pleasure to be on with you, my friend.
Why is this topic important today? So why do you think most high-end income earners avoid these sort of conversations until maybe it's almost too late?
Well, I'll go ahead and tell you, at the end of the day, nobody wants to focus on the important unless it's urgent, especially entrepreneurs and people who are super financially successful, because there's always a list. And whatever's not urgent gets pushed down and pushed down and pushed down. And I'll tell you, it takes a motivating factor. It takes something like a threat. Maybe it's an attorney letter that shows up, an unexpected lawsuit. Maybe it's a close call when it comes to like a life issue, a health related issue, something like that. Kind of wakes you, it kind of gives you a jolt and says, man, maybe I need to focus on taking care of home base a little bit. And I hope you don't have to have that. I hope today actually acts as one of those jolts to get you to say, let's take this from an important to an urgent matter and make something happen today.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS.
Well, making money is always step one in the process, but keeping it is the game no one teaches you. So let me bring in our next coach. The doctor's in the house, Mr. Eric Hudson. Good to have you back on, my friend.
Russ, man, I'm so excited to be here with you guys.
All right. What keeps people from addressing this earlier? Was it trust, complexity, denial? What do you think?
Yeah, Russ, a few months ago, I'm fortunate enough to live on a little private lake. And a few months ago, I was fishing, and I've, been fishing here for years. I've hooked everything that I thought could be hooked in the water there. So I'm fishing this one day, and all of a sudden, my line, I'm fishing a braided line, pretty much an unbreakable line. And I'm fishing, and that line starts running off my reel faster than what would seem possible in the physical world that I understood, at that point in my life. And I was cranking the brake on the reel, and nothing was stopping that thing. That line was running off so fast. I honestly thought that, this is not a joke, I thought it was going to start smoking because I couldn't get that line to quit running off my reel. And so I stood there frozen. I realized I had a problem because I'd been made aware of that because something happened. I've got a problem, but I was frozen because I didn't have any idea what to do about it. I knew if I grabbed the line, it would cut my fingers. I couldn't stop it. Eventually, it just ran all the line off. And I just stood there staring at my reel and then looking at the water back and forth, not even knowing what had happened to me. And I think so often in life, something happens and we realize, holy smokes, I've got a problem, but we stand there sort of locked in confusion about exactly what to do about it. And maybe even like me, in a little bit of denial, did this just happen? And so I think that's why that stops a lot of people from taking the next step, is they realize they had a problem, maybe pretty suddenly, and then they're a little bit frozen about what in the world do I do next, and who do I even call to help me fix this?
All right. Whether this is for the bloopers part or not, can you finish the story? What happened?
Yeah. So I still
Somebody's car, or I mean, what we got live to do?
right. I still sit here today completely in the dark about what it is that I hooked into and what kind of monster is in that lake. I mean, it burned every bit of that lineup, all of it, and kept going, and I have no idea what it was. It, I mean, there's not a bass that big in the world that could have done what that did. So I don't know.
I think it's a gator. I think it's a gator. I'd say it's team meeting at Eric's next week.
All right. Let me bring in the recovering CPA, Mr. Anthony Faso. Great to have you back on the show, my friend.
Pleasure to be here.
The same question for you. Like, what is keeping you or others you believe from addressing this earlier?
I think there's two parts. One is a lot of times we don't know about the risks. Like one of our biggest expenses we have for an entrepreneur business owner is going to be taxes. And a lot of times, for one, they don't realize that. And rarely are we working with a CPA or a tax strategist that can be proactive. So we don't know what we don't know. And also when talking regarding asset protection, I would concur with Joey. It's important, but it's not urgent. And for me, I knew there was a risk. And then what really opened up my eyes is when I got a repair bill for one of my rental properties to fix 9 bullet holes. I mean, my first question, did anybody get hurt? And fortunately, no. But the second thing is, what if they did? I've been dragging my feet on either getting an LLC for the entity and also setting up some asset protection. I had, was focused mainly on, when we're early, a lot of the asset protection these policies can supply a lot of that protection. But as we start leveraging and buying other assets, we're creating additional risk. So it's really that it's important but not urgent.
That must have been one of those houses Joey was living in early on, because we were talking about that before press and record, that
Yeah,
Joe was doing a lot of time.
Fence.
Yeah. Okay. All right. Let's bring in our last coach, Mr. Beham, my good friend Jamie O'Brien. Good to have you back on, my friend.
Man, good to be here. Excited for this.
So, what do you believe the emotional toll of realizing that your wealth could be taken, taxed, or wiped away is for people?
Well, I mean, you just think about Anthony's story there. I'm a real estate guy myself, and knock on wood, I haven't had anything that wild. But I think with a lot of entrepreneurs, I'll tell you here in a second what it was for me. With a lot of entrepreneurs, business owners, investors, like we're so focused on going and building the thing, right? Going and doing whatever we're trying to build that we just forget sometimes, or just to Eric's point, don't know what the next steps are. And honestly, when it kind of hit me, it was that first conversation of trying to figure out what my next steps were. I mean, the emotional toll really was like, it was fear, right? What could have happened, or what could happen if I don't get something in place to protect my assets, to protect my wealth. It was frustration of like, okay, this wasn't that hard. I just had to go find the right person. And that was a little bit of work. Like, I'm frustrated I didn't do this earlier. And really some guilt. Like, I've put my family and what we've built at risk for this long. And so there's a little bit of all three of those things. Cause I mean, again, we've worked so hard to build this business. For me, it was real estate and kind of our wealth. And we'll talk a little bit about IBC helps protect some of that. But like, I hadn't really protected what I built for my family. And that realization kind of shook me to, okay, I've got to make this from important to urgent immediately and get this stuff in place.
Let's just face it, right? Most of us and most of you listening are entrepreneurs. We tend to look straight out the front window and forget what's behind us. We have so much optimism, right? Like anything's possible. And we don't dwell on the past, and because we can't, right? Like when you dwell on what's in the rearview mirror, you're going to run into the things that are coming in front of you. And I think that that's why this topic is so important for you to listen to examples, right, of these coaches. Not obviously, we're not perfect. We've had these experiences. We're running to them. Our goal is to share these lessons with you, so you don't have to pay full retail. But also, we're having so many conversations with people just like you that exposure opens up an opportunity to go, I didn't even think about the bullet holes that could happen and what that would have been like. You think about maybe the slip and fall, but you don't think about somebody dying in one of your properties, what that could be. And all of this is something that we need to be aware of and just protect, right? Like what you protect is actually then yours. If it's not protected, then it's not. And I think we need to be really confident in that. So I really want to talk about what is or what are some of the things these high income earners or potentially entrepreneurs are missing. So Stallion, what would you say is a common exposure that you see when reviewing successful entrepreneur and investors' finances?
I would say two things. Number one, taxes. Most, as Anthony kind of led into, taxes are the thing that we have very commonly as entrepreneurs just offloaded, delegated to an accountant, thinking an accountant is actually helping us to reduce our tax liability when that's really not their role. Like we're asking a mechanic to do our grocery shopping. Like we're asking somebody with a different role to, even though they're related, right? Like you think tax strategy and tax reporting are the same thing and they're not. And so I think that there's a lot of missed opportunity from exposure there where you're unnecessarily paying things that you shouldn't or don't have to. And it's because you just never really dug in yourself. You just handed it off and assumed it was being done. The second area of exposure is most people have just taken the advice of long-term 401ks, other retirement type vehicles as the massive amount where they put their wealth. And they're expecting that at some point in the future to be able to be handed down to their kids in an estate type of scenario. And one, it's actually one of the worst possible places for money to be handed to the next generation from a tax perspective. But the second thing is it puts you in the mindset of just handing down money without knowledge. And it creates a disperse and dissipate kind of philosophy. Meaning, okay, I pass away, this wealth that we've accumulated goes to the next generation without a lot of explanation or guidance or, direction. And all of a sudden it's dispersed and then it dissipates. And it's very similar to, we've talked about before, the Vanderbilts and how so much wealth was accumulated and then it was gone within a couple of generations. That's not what you're doing as an entrepreneur. You don't want to be in that position. And so, you need a different plan is ultimately what it boils down to. And I think today we could probably shed some more light on an alternative.
I'm going to tighten your analogy up just a smidge because you made the comparison of the mechanic versus them, helping you buy groceries, right? Like those are so far apart. I think they're closer, right? Like there's never a perfect analogy, but I think it's like asking your mechanic to plan your uh, miles per gallon, like your fuel efficiency, right? Like some people are, are trying to get the highest, miles per gallon out of their car. If you spent time with your mechanic, could they help you be better fuel efficient wise? Could they help you like think through some things that you're doing that they would know that sort of information? So it's not the accountants don't know how to do these things. That's not what their daily role is, right? So their daily role is to take in the tax information that you give them. They'll ask a number of questions, right? They're not trying to neglect you in the situation, but they also have cars in line, right? They unfortunately just don't have hours and hours to spend on every single person. So they take the information that they have available and they apply it. And I think that that's what we see is that oftentimes though we assume the difference, right? The definition of disappointment is what? Is when we have unmet expectations. So if our expectation is for our financial or tax professional in this situation to be helping us minimize our taxes to the nth degree, which is a huge liability that we have, and so many people will wake up and get that first estimate from their accountants in 2026 and realize it's way more than they had planned for, and they'll be upset. Why didn't you help me plan for this better? And by the way, when you're in 2026, you can't make adjustments. What's happened has happened. Well, it wasn't their goal. Their objective, what their expectation was to file all your stuff on time and to keep you out of jail. All right, I'm gonna come to you, Jamie. How do most people maybe falsely assume that they're protected?
Yeah, I mean, I think to tie into what you guys just talked about, this is not a set it and forget it process, right? I think because a lot of people, and I'll tell you a personal story. Like I set up when I first started in real estate, I set up an LLC, a passive entity. We did a trust years ago, and I was like, hey, I'm good. I'm good. But there was no real coordination between like a real estate attorney that was helping me protect my assets, my trust attorney that was building this whole plan, my CPA on what was happening, and we just went through a couple of years ago just like a whole revamp. And what I realized at that point in time talking to the right people was, yeah, I had this LLC, we had insurance in place for the properties, there was some protection there, but I also was commingling active and passive activities in an LLC. There's different tax strategies and benefits within those, and now every property I owned, if I was exposing myself to more liability, potentially doing a flip in this LLC, now I'm exposing my risk to all of my rental properties that are meant for long-term wealth generation, right? Because they're all under the same umbrella. And just starting to realize that as things change in your business and your life, you need to make changes in your structure, in your entity structure, in your trust, in your tax strategist, whatever that is. It's not just a one and done, set it and forget it process. So that's a little bit of just a personal analogy of what I've been through and what I've seen.
Definitely a misconception, right? Like once I set up that LLC, it accomplishes everything I needed to do, right? Like because we always have been told, hey, we need to have this LLC for our investing purposes, and we delay, we delay, delay. We finally do it, right? We finally put that home in the middle of the hood that Anthony owns, that is a slumlord, and we put it in the LLC. We're like, we're good, and then all of a sudden things start changing, and we don't realize that we have to make adjustments, and we're opening ourselves up for liability. Great point there.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz. Wealth Without Wall Street Tribe, do you want more ways to build wealth and live free? Then you got to check out the Lifestyle Investor Podcast with our friend Justin Donald. He's interviewing top investors and showing you how to design a life on your terms. Check out the Lifestyle Investor Podcast and subscribe today.
Eric, what are some areas of life maybe people feel stable in but are actually fragile?
Yeah, I'm going to try to keep this succinct, but I've got a lot to say here. So Vanessa and I are watching this documentary about this restaurant that this lady opened in Nowheresville, Maine. Like, I mean, in the complete boondocks. So this lady has got this ridiculously popular restaurant. Let me tell you how popular. They do 2 settings a weekend, and they can sit 40 people per setting. The only way to get a reservation is to send in a postcard, and they get 4,000 postcards a week.
Oh, wow.
That they just draw out of to try to set those 80 settings. So they've got this place in Nowheresville in Maine with basically no overhead because it's not a big city that they're having to pay these big rental rates or lease rates. They've got this overabundance of people that are wanting to buy their product. And they're charging, let's say they're making about, based on the math I've done, about $50,000 a weekend that they're bringing in, maybe more. That's just the rough math that I did. Everything seems great, right? Except guess what? What we all just lived through. COVID happened. Something nobody saw coming. I mean, when they did their planning, they're looking into the future. Everything is lining up for them to just continue to crush. But they had a single point of failure, and that unexpected thing happened. And I think so many of our high incomers are out there, whether they're entrepreneurs or just high income W-2 or 1099 earners, is they have that single point of failure without creating additional passive or income streams, and that at any moment in a single point of failure, the unexpected could happen. So I think it's critically important, and I really learned that, is that I want to have more than just one stream of income. I want to plan and create those multiple streams so I don't have the one thing happen that just shuts everything off.
No, that's so good. There was a book that I attempted to read. that this was one of those really, like, all books are hard for me, and especially the ones that I have to actually read out loud, as Joey knows. But there was a book called The Black Swan by Nassim Taleb. I think that's how you pronounce his name. And it's talking about, like, what are those unseen events? What are those catastrophic events that could happen that could eliminate everything? Single points of failure, right? And without considering that, no matter what you have could be taken away. Great point there. Anthony, I don't want to leave you out on this. I know that you have, been in the financial world for 25, 30 years, taking you back into your CPA days, and then you've been an amazing financial coach for the last 20 years. What are some of those common, exposures you're seeing as you're reviewing and working with clients?
One that we haven't touched on is having access to capital.
Mm.
When something happens like a black swan event, or you need liquidity because maybe you need to pay payroll, or maybe there's a large expense, or business is down and maybe you need to do some marketing, or something is happening to your business, and that oftentimes we don't have a lot of margin or a cushion, particularly, again, like Joey had said, we go to our CPA like in September to do the taxes from the last 18 months. There's not a lot he or she can do. And one thing they do have in their pocket, oh, let's put a IRA or a 401k, which sounds great at the moment, but one of the biggest obstacles for entrepreneurs is that liquidity, and we put that money aside somewhere that's locked up, and when we do need it, we have to pay taxes and penalties, which means not only could we lose on some opportunities, but there's also the possibility of potentially losing our business. So I think one thing we need to do to protect ourselves is have some access to capital, and that's where infinite banking comes in, which I'm sure we're talking about in a little bit more. But the liquidity is, I think, an often under aware of issue.
No, for sure. What's the biggest obstacle to becoming financially free, Stallion?
Lack of access to cash.
Yeah, that's definitely an area. So, Joey, as we kind of start talking about how to bulletproof our wealth, because I want to get more tactical here. Tell me, what, in your opinion, what's the difference between maybe just having insurance and using it as a strategy?
Okay, I have 3 thoughts on this. 1, you should always get your insurance for free. 2, you should have more coverage than you have today. And 3, it's about education, not just assets, going back to the whole disperse and dissipate comment from before. So number 1, when you looked at buying insurance in the past, someone offered you term or whole life, and they said, hey, this is the death benefit with either one. This costs this much. This costs a lot more. Which one do you want? And I would tell you that thinking is flawed, because a term insurance policy is the most expensive policy you can buy. You will never get those dollars back unless you die an untimely death. That's the only way it ever pays out. As opposed to a whole life insurance policy will always produce more than the amount of money that you put in. So I would ask you just plainly, how much did it cost you if you put in $1 million and it paid out $3 million? It was a zero cost. In fact, it was a gain to you. So you should always get your insurance for free, and you can't do that with a term insurance policy. Now, there's a place for term, but we're talking about building and securing wealth and bulletproofing your wealth. This is about wealth creation and protection. The second thing, and this I've shared this on the podcast many times, before I learned this, I was buying term insurance for my family. I had over $2 million of coverage, and I thought, dude, I'm dad of the year. Like, nobody's out, nobody's got more coverage than I do. And as soon as I flipped the switch and started thinking about infinite banking as a strategy, not just as insurance, I ended up with over $3 million of coverage by thinking of it as a place to store capital. Now I multiplied my coverage got my insurance for free. Like this is a big switch. And you want to talk about like headwinds and tailwinds as it relates to your finances. This is a huge tailwind to help me get ahead financially. And then the third thing, when you use insurance as a strategy, not just as death benefit coverage, now I have an actual system to educate my family on how this is going to go down. I'm building a system, you're a part of it, and you're going to actually inherit this system when you start using it properly. When you have the wherewithal to be a good steward of the system, you benefit from the system. And guess what? They're really interested in learning about the system as opposed to I die, assets go to the next generation. They have no system, they have no kind of context on how to use it. Guess what's going to happen to that money? It's going to get spent, and all the wealth that you work so hard over your entire lifetime to create is gone. So those are the main three things that I would consider as opposed to think of as a strategy versus just coverage.
Well, you didn't have a good enough advisor. I'm going to tell you, the only two options they gave you was term and whole life insurance. Like, come on, man. If we would have just known each other earlier, right? In 2004, when I came a financial advisor, had all those securities license, I would have given you a third option. I wouldn't have give you the whole life. That was just trash. Like the only person that's selling whole life insurance in those days weren't smart enough to pass securities exams like I was. They would have given you an option to invest in variable universal life insurance, right? And so it wouldn't have been that just your money would go away eventually by term insurance, or you would have it forever through whole life insurance. It would go away super fast even before the term insurance because the market would crash and you would have not had either. But you would have spent a lot more money than you would have had on the term insurance. But you could have told your friends about this fancy new tool that you had. That's what I had. So tongue in cheek for those who don't understand what I'm talking about. This is one of those, many things that Wall Street taught me about how to secure wealth and to make money is to put it in, the stock market and then wrap it with insurance so that you can get all the tax benefits. Little did I know that when the markets do go down, which they do from time to time, that the thing that you've been building is no longer yours either. So if you're trying to save and protect your wealth, and protect your family, you don't want to have something that's built on sand that has maybe, landmines underneath it that could just make the whole thing go away. All right. Jamie, speaking of that, coming to you, what was the first layer of protection maybe that you added once you saw some of the risks that you've talked about earlier?
Yeah, in the newbie real estate investor sphere, there's this massive debate on do you need an LLC or can you just cover yourself with an umbrella policy, insurance, right? Just a layer of insurance. I went ahead and did both when I first started, and I think insurance was really the first layer for not only my properties, right? I want to protect these assets that I was buying from loss, from fire, from bad tenants, from potentially something happening on the property and protecting myself and the liability there. But once I started down the real estate path, and Joey knows this conversation all too well, it was really like, hey, now I want more access to capital. I want somewhere to put that, and I learned about infinite banking, right? And so, from a wealth standpoint, my properties were making money. I wanted to protect that money. I wanted to protect that wealth. And one of the cool benefits that I learned a little bit down the road of this discussion of infinite banking was creditor protection. In certain states, you are protected from creditors in these whole life insurance policies. And that became super, super important to me from just an asset and a wealth protection standpoint. So first layer for me was different kinds of insurance. Love it or hate it on the property insurance. I know that rates are spiking right now, but at the end of the day, if my house burns down and I have a mortgage on that property, I want to be protected. I want somebody else to help me pay for that. And so insurance is always, I think, an important piece of the asset protection conversation. Just making sure that you're structuring it correctly to the bigger plan and the bigger structure.
Eh, Here's a great and horrible example of the protections afforded to the insurance industry, right? That even atrocities where civil lawsuits that have been awarded to families against someone who may have or may not have, killed some people. There's a great example of this going back to O.J. Simpson, right? After the trial, he was, acquitted from the federal trial, but was, had a judgment against him on the civil trial. and they were able to go out and get all of his assets. But yet he was living behind a gated community prior to, the new gated community he got himself on later in life when he broke the law. But he was living in a gated community pretty well from all the, outside standards that people would say. People say, well, how is it that he's living this lifestyle, right? When all the money he owes to these families from this civil lawsuit, do you guys know where he was getting paid and how was he able to live and that money was not being passed along to those creditors? He had an NFL pension. That NFL pension is paid through what sort of mechanism, Anthony?
Annuity.
An annuity, which is a part of a life insurance company. So just a horrible example of how the protections actually even protect those who would maybe have done something really horrible. That is like when we think about, things that could happen outside of our, like we could be driving down the road and something bad happen, right? Maybe not our intention, but these insurance companies that we're storing our cash in are a protective measure. And we don't think about that whenever we've got money sitting in bank accounts, right? Those dollars in the bank account could immediately be subjected to creditors, right? Like we feel good that cash is there. And there's a lot of you listening right now that needs to hear this, that you are sitting on a landmine of cash. We talk about cash as one of the worst assets on the balance sheet. And most of the time we're referring to the inflation component of how it's just being eroded away daily. But allow one of these issues that have been discussed today and all the ones that we haven't even discussed, where that money now can be attached. You can't move it after that lawsuit. Like that you would be violating all sort of potential legal procedures. But that money sitting in your insurance contract, that cash value is just as good as what O.J. Simpson was dealing with in his day. And I want that level of protection for my family and for the money that I've worked so hard for, that even in an atrocity, I still can protect it, right? All right, I want to come to Eric, you and Anthony. I'm gonna ask you the same question, and Eric, I'll let you answer first. How does something like infinite banking double maybe as both a defensive and an offensive tool?
Yeah, I really go back to, I'll dovetail a little bit on what Anthony said a few minutes ago. It's really access to capital. And I think for some people out there, they may not understand the difference between net worth and cash flow. And here's an example. I may have a $1 million paid for house. I may have properties outside of my home that are worth 10 million. But if I don't have cash flow, I can't go to the grocery store, Anthony, and say, listen, I don't have any money in my account. Maybe I've been injured, maybe I'm sick, and that cash flow is not coming right now. But I want to tell you, Mr. Cashier, about the equity I have in my home. I'm telling you, I've got $1 million home. So if you don't mind, can I get this milk and loaf of bread? They're going to say no, because equity and net worth doesn't matter without cash flow. So one of the things that infinite banking allows you to have, and we haven't really talked about illness protection, is what happens if you do get injured or sick and you can't create the income that you had been creating just prior to that. Infinite banking is a place that you can access capital regardless of the reason why you need it or want it. Russ, I hear this about banks. Banks will give you loans when you want it, but not when you need it. It's completely different with your infinite banking system. You can get those dollars and access to capital anytime you want for anything you want, whether it's from a defensive side of, holy smokes, I've got to fill in a shortfall that I've got on my cash flow, or an offensive side. There's an opportunity that I can't pass up. Now I can take advantage of that opportunity because I have access to cash.
So good. All right, Anthony, same question for you.
Well, I want to expand on what Eric had talked about. I'm sure I have some clients that have some assets or some homes that are paid off, which sounds great. So what I recommend is you get a home equity line of credit now when you don't need it. You don't need to use it, but just like Eric said, is if you're sick and you try to go to the cashier or to the bank, they're not going to loan you the money. You need to get all of that, those lines of credit established when you don't need it. And what was eye-opening to me is if we go back to, say, 2007, I was just where a lot of you guys were talking about. I was a CPA focused on maxing out your 401k, getting term insurance. And Russ, I had not me, my whole family had a VUL, right? It was sold to me that this is a rich man's Roth, right? That you can put the money in, grow with the market and not have to pay taxes similar to a Roth. But then 2008 happened and we lost 50 to 60% of that cash value. And that's what opened up my eyes. And I saw clients, most of them really got punched in the gut, but very few actually thrived. And that's what opened up my eyes. What are you guys doing different than what everybody else is doing? And you know what? They were in the position of liquidity. That's where I heard about the infinite banking concept. And as far as using infinite banking on the offense, there's recessions constantly. We've even tested them back. There's a recession literally every 10 years since the 1900s. Recently, it's been a little odd where we haven't, which to me might seem that the next one it could be worse. But which means it's important to be in a position of liquidity because so many people are so tightly, they have no margin. They're not going to be able to make payroll. The businesses will go on sale. And if you have a position of liquidity, like we talk about lazy cash. What about easy cash for lawsuits? If you get sued and you got plenty of money in the cash, very easy for not only for them to find it, but for them to take it. If you have it in assets, it makes a layer or trust, adds a layer of complexity. But you have that cash in the policy, not only is it protected from creditors, but now you can use it to buy these assets that are going to be on sale.
Yeah. Well, gentlemen, this has been a fantastic podcast. I mean, the goal here for you listening was this isn't about fear, right? We don't want to instill fear. Right? I think as entrepreneurs, we live in fear. So sometimes we're immune to fear, right? And so the goal was not to definitely instill or to bring up fear, but it is about responsibility. It's about stewardship. It's about legacy. And how do we protect our future? How do we add to the generations to come? Because to your point, Joey, early on, like we need to be able to pass down the instruction kit, but knowing that not all are going to be equally good at managing it, right? And so the more we protect, the better off we can protect them in the future. And I think that this has been just an episode that just aligned with what all that we're always saying is that we're financially free when our passive income exceeds our monthly expenses. But when we protect it, we put that moat, if you will, around the castle. It gives us the opportunity to let down the drawbridge from time to time, go out and do our entrepreneurial things, but be able to come back to a house that's protected. Maybe we got some arrows in the back, but at least when we get back inside those gates, all's well, and we don't come back to the house on fire too. And I hope you found value in this. If you're interested, if you're hearing about an infinite banking concept and you've never explored that before, DM us and Instagram the word IBC. And we'll send you access to a webinar we've done on this that may open your eyes to what these coaches have been sharing and how you might be able to use it as well. Thank you, coaches. Thank you for listening. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.